Welcome back to Robinhood Stock Market Watchlist Facebook group. My name is Carlos, and today is Sunday 13th. We're going to talk about this next week coming ahead with what's scheduled to happen. And this is our live meeting that we usually do every Sunday. That way we can kind of get together and always look ahead, because it's one of our really most important things is to always know what's going to happen before it happens. It just provides us a huge advantage, rather than being that person that relies on the news and then it's already too late. We need to know when the news is going to happen before it happens. That way we're already taking advantage of opportunities more than the other guy. And so one of the most important things that we always got to look into first is economic reports, because economic reports have the biggest impact on the entire stock market system, not just a segment of it, but the whole entire or the majority of the entire stock market system. And so one of our favorite places that we like to use is a website and an application called investing.com. There's a really neat economic calendar that is there that we can easily configure, so that way we can kind of narrow down the economic reports that'll have the biggest impact on the United States stock market. And so there isn't anything scheduled for Monday, and that's typical. Normally there isn't anything scheduled for a Monday or a Friday. However, this week we do see that there is something scheduled for Friday. But Monday is usually kind of like a cooling day. It depends on what was going on maybe last week or last Friday. If things were getting a little crazy, Monday just kind of is a stabilizing day. Or it could be a day that kind of absorbs weekend news and it could be international news that can also affect the stock market, like what's going on with Russia and Ukraine or China or Taiwan but I think the majority of this weekend news has been pretty much focused on the election. And the important thing is, where before the election had always had uncertainty, but as we get further into the election, there will be more and more certainty of knowing kind of what's going to happen now as we get closer towards the end. And so that is always kind of a bullish thing. Overall, I mean, sometimes our emotions can maybe interfere, where if Democrats more taking the lead, that the stock market may open red, or Democrats or whatever, but the important thing is that it's almost over, and the market and the economy can resume kind of where it left off before all this election stuff. So I think the investors in Wall Street are going to be bullish as we get closer to the end of this. That way we can focus on other things. And so so Monday, I think for the most part could be bullish, but we're going to look more into what people were doing, because one of our other rules and our guidelines is to always follow the money. And so we'll look at some activity here in just a little bit on if investors were bullish or bearish going into Monday. But Tuesday we have the PPI month-over-month report for the month of October, and so there's several things to know when it comes to these economic reports, if you're just now getting used or learning about this. So timing is everything, as well as knowing what the report is and learning more about this actual report forecast in the previous report. So first things first is the timing. It is critical that you know whether the report is going to be released during pre-market, before the market opens, or is it going to be released right when the market opens or after the market opens. And so that way we are aware, because the first hour and the last hour of the market day is the most volatile time. It has the most activity, and so it's just important to know, because if it's after, especially 1 hour after the market opens, then we know it's going to continue more momentum, more volatility after that first hour. So that way it becomes 2 hours. The first 2 hours of the day will be the most volatile time of the day. And however, going into Tuesday, this report is scheduled to be released at 8:30 a.m. Eastern time. So that's 1 hour before the stock market opens, based on whatever time zone that you're located in. But if you're not sure what these reports are, feel free to go ahead, click on them. A new tab or a thing will pop up, depending if you're on your app or not. But it explains a small paragraph of what that report is and how it will affect the stock market. So the Producer Price Index, or the PPI, measures the change in the price of goods sold by manufacturers. It is a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. This is a higher than expected reading should be taken as a positive or bullish for the US dollar, while a lower than expected reading should be taken as a negative or bearish for the US dollar. But sometimes things can have an opposite effect if this can kind of bring or increase the US dollar with the way that they're trying to decrease inflation. Sometimes it can have the opposite effect because they're trying to maybe lower the US dollar. And so, but we always want to focus on the majority primarily, because what we're seeing is the difference between the forecast and the previous. That's huge, because other professional traders and investors are doing this exact same thing. And same thing as Wall Street and all those other guys, multi-million and multi-billion-dollar hedge fund companies. They're doing this as well. And you'll notice that the previous report for the PPI was at 0.4%. So the forecast, which is expected to be higher, which is bullish, it's expected to be at 0.5%. Now, a lot of times when this day comes and the forecast is lower, but for some reason the market is still bullish, because for some reason the investors of the market still seems to carry out what was originally intended to happen. And so even though the forecast, or if the actual report came back lower, even though the forecast was higher, the market still seems to become bullish, when usually you would think it'd be the other way around, where if it was down, that would be bearish, and then then the market should plunge and whatnot. But most of the time it doesn't. It's just very weird. So, but we always need to just stick with the majority. And so Tuesday morning looks bullish. And then going into Wednesday, we have the core retail sales for the month of October and the regular retail sales for the month of October. Both of these are scheduled to be released 1 hour before the stock market opens on Wednesday morning, November 16th. Now, the core retail sales for the month of September was 0.1%. The forecast for the month of October is expected to be higher at 0.5%. So there's another bullish characteristic. Same thing with the retail sales. The month of September was 0.0%. Now the forecast for October is expected to be at 0.9%. And as we get closer to the Christmas holidays, shopping in retail is just naturally going to increase. This is the fourth quarter is where the retail sales does the best, compared to most of the year. And so we're entering kind of more of a retails sales earnings, but that is for third quarter. So that may be a bumpy ride, but as we're going through the fourth quarter, and then once we get into the first quarter of next year, when we are releasing the fourth quarter earnings, they should be doing pretty well. But right now, I would anticipate kind of a bumpy ride for them. But the fourth quarter is may start off pretty good, and so bullish 1 hour before the stock market opens. Then the market opens, and then 1 hour after the stock market opens, we have the crude oil inventory levels. Now, this is a weekly report. Now, the more rare these reports are, the more volatility, the more of an impact it's going to have on the stock market. So, for example, if it's a weekly report, it's going to have a mild effect on the stock market. If it's a monthly report, it's going to have a good impact on the stock market. If it's a quarterly report, it's going to have a great impact on the stock market. And if it's a yearly economic report, it's going to have a major impact on the stock market. So definitely expect a lot of bullish characteristics for Wednesday morning. And for the crude oil inventories, even though this is a weekly report, most of the reports need to be up. There are two reports that need to be down. If they're down, that means it's bullish. And that would be for the crude oil inventory levels and the initial jobless claims, which would be the unemployment report. Now, the reason why these two need to be down is because if the crude oil inventories are down, that means people are driving, they're or flying, or riding the train. They're doing stuff that and that results into spending money on oil and gas and fuel and as well as other things, going on vacations, road trips, that helps the economy. Unemployment, as long as people are employed, they're paying taxes, they're shopping, they're helping the economy. That helps. And so crude oil inventory levels are anticipated to be down this week, reporting at forecast at 1.36 million barrels. Last week it was up, so that's bearish. It was up almost 4 million barrels. So if it's down, and usually the crude oil inventory levels have a weekly swing. Ever since the gas prices have gotten to a certain point, what we're noticing is most Americans get paid every 2 weeks. And they go to their favorite gas station, they fill up, they try to make it last for 2 weeks. And so what we're seeing is people are consuming fuel 1 week and not the next. Then the next week they're consuming fuel and then not the next one. And so this is the week where we're going to see where the crude oil inventory levels are down, which is bullish. And so this is, guys, this is a great phenomenon. This is a gold mine. This is what tells us how the week is going to play out for the majority. And so Thursday, November 17th, we have the building permits. And so this is kind of will affect the housing industry. So this lets us know, or lets the economy know, is the housing market slowing down, blah blah blah. Now the housing market is very good at trying to keep their numbers up. If you guys have not watched that movie called The Big Short, that's based on that 2008 housing crash. That is a great movie. It's based on actual events, but you'll notice how well the housing industry was manipulated, trying to keep the numbers up, and that's kind of what they're doing now. And so they're just trying to keep it up. But we do see that the forecast is lower than the previous. So that's letting us know. Expect bearish characteristics for that report. However, the unemployment report, which is slightly lower than the previous, which is bullish, but this is a weekly report. The other one is a monthly report. So there's more potency with this bearish characteristic than this bullish characteristic. However, we have this Philadelphia Fed Manufacturing Index, which is slightly lower than the previous report. So, and this is a monthly report. So we do have, we do have some bullish characteristics with this. It would be nice if this was a little better, but So I would expect maybe some mixed signals going into Thursday. Definitely some volatility. One of these guys is going to dominate the majority of the impact. Just not sure which one. Most likely, it's probably going to be the building permits. And with the building permits down somewhat compared to the previous, I would say I'm more bullish than I would be. Excuse me. I'd be more bearish than bullish, especially if both Monday, Tuesday, and Wednesday were bullish days. We need a good day to cool down. So we need the market to come down on Thursday. So this means great opportunity, especially if we know what's going to happen before it happens. This is a great game plan. Just like if we're doing football or something, we're looking at all these plays. This guy goes there, does this. This is that gameplay. So Friday we have the existing home sales. We're just talking about the housing industry. So this is a big one, monthly one for the month of October. And the existing home sales is basically used homes that holds the majority of the housing market compared to new homes, which new homes report, they only make like 500,000 every month. This is, it used to be 5 million, but it's trickling down because interest rates are sky high. And a lot of people knew that this was coming. They were buying houses while interest rates were low, and so everybody secured their homes and stuff right now. The only ones that haven't are most of them are going to be your first-time home buyers, which we all feel completely bad for them because they weren't able to maybe get a house at the time when things were amazing. And so this is again forecast to be lower than the previous. So definitely I would expect a lot of bearish characteristics, not just mixed characteristics, but full on bear mode for Friday. And it's the last day of the week, and especially before going into a holiday week, but also a weekend where all kinds of things can happen, and that can affect the next day or the next trading day, which would be Monday. And so and usually going into the next following week, we have Friday, or both Thursday and Friday are going to be affecting the market next week. Next holiday weeks are just very, very weird for the stock market. There's a lot of low volume. Most traders just seem to just take the week off. So the volatility is probably going to be very light. So the stock market is obviously going to be closed on Thursday, November 24th, and then Friday, November 25th, it will be open, but it's going to close early. So it's really going to be open for like a half day, and then that's it. So really we got 3 full days for next week, and then a half day on Friday. And so, but a lot of volatility is going to be this week, and a lot of the economic reports are going to kind of get cram-packed in here. This is going to create amazing volatility, and volatility, especially with a lot of the strategies that we like to implement, like straddling stock options. We can straddle both calls and puts. This type of early morning volatility is in our favor, because I always say you can only lose what you have on one side, but your gains on the other side are potentially unlimited. Worst case scenario, if you lose 100% on one side, you may have gained out 200 or 500 or even 1,000% on the other side, which we'll look into that a little bit more here in a few. But the next major thing that'll have a huge impact on either the stock market or segments of the stock market is the upcoming earning releases. And so we'll switch over to our Facebook group page here. Now, everything I post is saved into our featured area. And so this week's earnings report is right here, and it's definitely jam-packed with a lot of stuff. And so but I have uploaded the top 10 most anticipated earning release analysis, and these are extremely highly valuable. And so occasionally I'll post a little video as I'm beginning to post these, but Walmart is expected to to release their earnings report on Tuesday morning before the stock market opens. The company's earning release has a 56% expecting an earnings beat. Now, normally these earnings beat percentages usually have a 65% expecting an earnings beat. If it's any less than that, it's below average. If it's any more than that, it's above average. But 65% is usually average. Option traders are pricing in around a 4 to 5% price movement in either direction. So Walmart can also affect other retail stores stocks as well as Amazon. Alibaba, which is kind of like China's Amazon, Alibaba is expected to release their earnings on Thursday morning before the stock market opens on November 17th. The stock or the company's earning release has a 51% expecting an earnings beat, while option traders are pricing in around a 10% price movement. And this could potentially move other Chinese stocks in either direction, such as like NIO and several others. Home Depot is expected to release their earnings on Tuesday morning on November 15th. Right before the stock market opens, the company's earning release has a 47% expecting an earnings beat. Option traders are pricing in around a 5% price movement in either direction. Zim, which does a lot of the shipping across the ocean, they're expected to release their earnings report on Wednesday morning before the stock market opens. The company's earning release has a 59% expecting an earnings beat. Option traders are pricing in around a 9 to a 10% price movement in either direction, where normally it moves about half of that. Tyson Foods, a picture can say 1,000 words. Tyson, the one company has a lot of these other sub-brands that's tied to them. So it's kind of interesting sometimes to see that. Tyson Foods is expected to release their earnings tomorrow morning before the stock market opens on November 14th. The company's earning release has a 49% expecting an earnings beat. Option traders are pricing in around a 7% price movement in either direction. As we do our grocery shopping at our local grocery stores, we've noticed that groceries are 50% to 100% more than they were a year ago or so. And these companies are definitely going to see or feel the pain, especially with these financial earnings, as less people are able to get the things that they want. They're getting the things that they need. Then there's Target. Target is expected to release their earnings on Wednesday morning before the stock market opens on November 16th. The company's earning release has a 40% expecting an earnings beat. As more investors, again, are not investors, but consumers are trying to find the best bang for the buck, whether they have to go to Walmart or shop at Amazon. Target is not usually the best place to find the best bang for the buck. So that's why we see the 40% expecting an earnings beat. Option traders are pricing in around a 9% price movement, where we've seen this kind of volatility before, but we're expecting a little bit more. Sundial is going to affect the majority of the cannabis stocks, and so Sundial is expected to release their earnings report tomorrow morning before the stock market opens on November 14th. The company's earnings release has a 30% expecting an earnings beat. However, option traders are pricing in around almost a 20% price movement in either direction. So if Sundial moves 20% in either direction, these other stocks are going to move probably 5, 10, maybe even 15% along with it. And those stocks are probably going to be like Tilray, Kronos Group, Canopy Growth. And so expect a lot of volatility tomorrow with the cannabis stocks. Then we have the C Limited, which they're expected to release their earnings on Tuesday morning before the stock market opens on November 15th. The company's earnings release has a 48% expecting an earnings beat. Option traders are pricing in around a 16% price movement in either direction. And sometimes we're always looking for a lottery play. A lottery play is something that that is a kind of a high risk situation, but could provide a huge opportunity. But a lottery play is something that we only want to put a very light amount of funds into. We don't want to go heavy on a lottery play, just in case if things don't work out, we're not going to lose a heavy amount of money. Just like the Powerball, we put a couple dollars here or there, whatever, to but we don't go heavy, because most of the time nobody around here wins, and so that's why we always go light, because if we do win, it'll be huge. And so, but when we're looking for a lottery play, especially if the company's earnings release has around a 50% expecting an earnings beat, that's almost a 50%. This thing can go up, it could go down, but either way, it can have a big movement, and that would be great for straddling. Straddling, again, you can only lose what you have on one side, but your gains are potentially unlimited on the other side. And so if things work out, it can be very, very beneficial with this kind of volatility. Next one is the Palo Alto Networks. The company is expected to release their earnings on Thursday after the stock market closes on November 17th. The company's earnings release has a 75% expecting an earnings beat, which is one of the highest out of all of these. Option traders are pricing in around an 8% price movement in either direction. And when it comes to cyber security and networks and stuff, this is it's always an in-demand thing. But also Nvidia, that's a huge one. Most anticipated earnings release this week. And semiconductors are always a touchy subject because of the short supply that we're in. However, Nvidia is expected to release their earnings on Wednesday after the stock market closes on November 16th. The company's earnings release has a 36% expecting an earnings beat. 36%. Now, what is the opposite of 36%? That is 64% expecting an earnings miss. We have to be able to sometimes reverse these percentages, so that way we know what the percentage is on the other side. Option traders are pricing in around an 8.9% price movement in either direction, and most likely it's going to be 64%. It's a chance it's going to be in the downwards direction. This could be something that we could easily straddle, but if you didn't want to be affected by what's called IV crush or implied volatility crush, we can always straddle that its cousin, which would be like AMD. And even though AMD doesn't have earnings, it's not going to be affected by implied volatility crush. Implied volatility crush will typically happen if after earnings and the stock doesn't move at all, it's at 0% or barely at 1%, then you could easily lose money on both sides, both the calls and the puts, because something didn't work out and it massively depreciated. And that's why we consider earnings as a lottery play. It's not normally something that we want to do unless you're experienced and can control your emotions, where you go in light and consider it as a lottery play. Otherwise, as part of our rules, never trade earnings. Always do before and after, or do its neighbor or cousin. But unless you're experienced and know how to control your emotions, then we can go in as a lottery play if you have that advanced level. but and then there are the our new one of our new process is to really, because this report comes from the anonymousprofit.com, and so, but it is also, we've learned that it is a valuable bit of information, because it can provide a little bit more information on earnings, as well as other company events, or other federal events, though we don't really see any federal events here other than the economic reports that we went over. The only federal events that are going to happen this week is just finalizing the election and all that jazz, but but we will see other things in here, like earnings, like Monday. We talked a little bit about the Tyson Foods, but Intel, it says option trading volume is elevated due to the companies participating in a New Street Research and BCG Innovation Conference. It's a 5G and beyond cloud. And so it says expect price movement around that 4.5%, by the end of the week. And so it's going to naturally happen anyways, because of NVIDIA is going to have a major impact on the semiconductor segment. And so, but we should see some pretty big swings. Maybe semiconductors are going to go up significantly on Monday, Tuesday, Wednesday, as we were kind of looking at the economic reports. That's the way it looks like. And then NVIDIA, after close, will probably announce their terrible earnings, and then semiconductors will plunge, and then that's when we'll see more bearish characteristics on Thursday and Friday. You see what we're doing? We're putting more of the pieces of the puzzle together. The whole week is starting to become more and more clear before it even happens. Let's see. So we have another one here. Payoneer option trading volume is elevated due to the companies participating at a Citi's 2022 FinTech conference. So investors are expecting a price movement around 7% by the end of this week. Verizon looks like that the company is participating in another innovation conference, and investors are expected around a 2 to 3% price movement by the end of the week. Looks like Rumble has some earnings as well. However, Rumble looks like that they're expecting a 25% price movement in either direction by the end of this week. That's pretty huge. But again, when it comes to whether it's trading or buying shares, we have to maintain certain rules and guidelines. And part of our rules is to always trade stocks or options with a certain amount of volume. If it doesn't have any volume, it does not make sense to get into it. That means if there's no volume, the trade idea is invalid and move on to something else. So as we're doing our due diligence, if this is one of the things we want to put on, or any of these things, if we want to put any of these on our watch list, it's got to have some volume. Otherwise, things are not going to work out. It's going to depreciate, and it's just, it's not good. And so, but like I said, a lot of these are more or less lottery plays. The ones we go heavy on are the ones that are the majority, which we'll get into here in just a little bit. And those are pretty much your Amazon, Apple, Tesla, and then AMD and NVIDIA. Those are the top 5. But then we have the next one is the D-Local. It looks like that investors are also pricing in around a 23% price movement in either direction. We talked a little bit about Home Depot, Walmart. Then there's Comcast. Looks like Comcast is participating in an internet and media and telecom conference, and investors are expecting around a 4% price movement in either direction by the end of the week. Then we have looks like Planet Fitness. Looks like it's hosting an investor day. Investors are pricing in around a 5% price movement by the end of the week. Then there's Lucid. Lucid is very similar to Tesla. They're an American electric vehicle company, but they're like the Mercedes of Tesla. They're very, very high end. The craftsmanship is there, and they have a range of 500 miles. So, but the company is hosting the In the Air and Beyond a Lucid launch event. So this is kind of like having a Tesla event, but this is a Lucid event. This is huge, and will have not just a big impact on Lucid, but a majority of the other American electric vehicle companies. So expect volatility with Tesla, and expect volatility with Rivian, possibly even Ford Motor Company. They will also be participating in a Los Angeles auto show on November 17th, and the Automotive News World Congress on November 18th. It says expect price movement in either direction by 10% by the end of the week. We looked a little bit at Target, but then we have Lowe's, does have earnings. And Oracle, the company is hosting its 2022 annual meeting of stockholders. Investors are pricing in around a 3% price movement by the end of the week. Then we have this one here, Alcoa. The company is participating in a Goldman Sachs Global Metals and Mining Conference. Investors are pricing in around an 8% price movement in either direction by the end of the week. Then we have Fundware, which the company is participating at a Roth 11th annual technology event. Investors are pricing in around a 22% price movement in either direction. Then we talked about NVIDIA, and then Cisco is also going to have earnings as well on Wednesday. Then Macy's is also going to have their earnings on Thursday. We talked a little bit about Alibaba for Thursday as well. Then we have the Riot. The company is hosting a special meeting of stockholders, and investors are anticipating around a 19% price movement by the end of the week. Coinbase on Thursday is participating at the Oppenheimer Blockchain and Digital Assets Summit. Investors are pricing in around a 17% price movement with Coinbase. That's huge. General Motors is hosting an investor day on Thursday. Investors are pricing in around a 5% price movement in either direction. Now, Fartech is also going to have earnings on Thursday, as well as Foot Locker on Friday, and JD on Friday as well. Then we have the Estee Lauder Companies is hosting a 2022 annual meeting of stockholders on Friday. Investors are pricing in around a 4 to 5% price movement by the end of the week. Pfizer is participating at the Wolf Research Healthcare Conference on Friday. Investors are pricing in around a 2 to 3% price movement in either direction. Last but not least, it's the Adams Fund. The company declared a special dividend year-end, distributing on November 10th. This marks the 58th consecutive year that the fund has paid out capital gains, and the 87th consecutive year it has paid out dividends to its shareholders. So that may provide some volatility. Doesn't have a percentage exactly what kind of movement to expect, but if you're into dividends, that may be a great one. So lots of activity that's scheduled for this week, but as we do our due diligence, it's important to always look at the investing.com's top 5 things to watch in the week ahead. This report is created and released every Sunday morning, and can be found on the investing.com website, or you can also just look on the top of our featured or announcements area on the top of our group page. So one of the reasons why we like to look at this is to make sure we didn't miss anything. In the coming weeks, investors will be looking at the spate of the United States data, including Wednesday's retail sales report, for more insight into whether the Federal Reserve's aggressive rate hikes are cooling the economy. The United Kingdom government is finally to announce its new budget plan, and investors will be paying close attention after the market meltdown set off by September's mini budget. Fallout from the collapse of the cryptocurrency exchange, FTX, will continue to reverberate through the crypto market. Meanwhile, the economic data out of China will be in the spotlight after Beijing eased some of its strict pandemic restrictions on Friday, boosting hopes for an uptick in economic activity. Here's what we need to know. So number one, we talked a lot about the data. This is the economic reports. This is the number one thing investing.com says that we need to be focusing on, because again, it helps provide us information on what the market is going to do before it doesn't. Number two, stocks. Let's see, it says the index rose 8.1% last week for the biggest weekly percentage gain since March, while the S&P 500 rose 5.9% and the Dow added 4% on the hopes for a less hawkish Fed. That just means that investors in Wall Street are hoping that the Feds are beginning to see the light at the end of the tunnel, and that the interest rate hikes will begin to cool down from their normal 3.75% interest rate hikes to hopefully down to 0.5%. Now, if Federal Jerome Powell all of a sudden comes out and says this isn't enough, we're going to continue our interest rate hikes, there is going to be a massive plunge with the stock market. However, we don't see a schedule with him yet in the next several weeks with him doing that. So far so good. We're bullish. We're right now we're in bullish mode until further notice. We got a potential view that the Fed may not need to get as horrible as we thought over the last couple weeks. Risk could be stabilizing here, but the Fed is unlikely to be swayed by a single inflation print, and past rebounds fueled by Fed-related optimism have crumbled this year after discouraging economic data or pushback from policymakers. Worries about the economic downturn have hammered equities this year. The S&P 500 remains down around 16% for the year to date, on track for its largest annual decline since 2008. Number three, the crypto turmoil, and what a turmoil that has been. With the whole FTX and everything. Concerns over the viability of the crypto ecosystem are continuing to swirl in the wake of the collapse of the crypto exchange FTX. FTX, which filed for bankruptcy just last Friday, was engulfed in more than chaos on Saturday. When the exchange said it had detected unauthorized access, an analyst said that hundreds of millions of dollars of assets have been moved from the platform in the suspicious circumstances. Rival exchange Binance stopped accepting deposits of the FTX FTT token on its platform on Sunday and urged other exchanges to do the same. Investors are now waiting to assess the extent of the contagion within crypto markets, which have already taken a beating this year as central banks reverse pandemic era monetary policy. Number four is the United Kingdom budget. Sometimes these may have a date. Let's see. Okay, so the United Kingdom Chancellor Jeremy Hunt is set to announce the government's new official plan on Thursday, and markets will be watching closely after September's mini budget from predecessor sent sterling tumbling and forced the Bank of England to intervene to stem a riot in the bond market. And so Thursday, so that's good to know. We did not know that, and so that will have, and this is number 4 as a priority level here, number 4. But it's good to know that that this could have more of a volatile impact on Thursday. And with the economic reports that we saw on Thursday, it looks like a majority of them were bearish, but there was a bullish economic report in there. So again, we're anticipating mixed signals Thursday, but maybe the majority would be bearish, where Friday is expected to be just plain out bearish. And so, but again, this could help provide more volatility. And then number 5 is the Chinese data. So China is to release October data on retail sales, industrial production, investment, and employment on Tuesday. So on Tuesday, and with China been slowly opening things back up, this is going to help their numbers look good. And so this is only going to make a bullish day more bullish. So, and it's interesting, as we put more and more of the pieces of the puzzle together, you'll soon see that it's almost like they're intentionally placing all these scheduled events on purpose. That way they're not like really interfering with each other. Why set a day full of mixed signals with a lot of bullish and bearish characteristics? No, we need to make a bullish day more bearish by pouring more of the fuel on the fire kind of thing. And so we're like Thursday, that's the day where we have mixed signals, both bullish, but where it's kind of the transition from going from bull mode to bear mode. That's normal. And so, but it's very interesting how this is all scheduled. It's all meant to happen. And so, but by knowing these things that are scheduled to happen, the next thing that's highly critical to be aware of before it happens is the president's schedule and the White House schedule. Now, these schedules are released to the public. If you just Google Joe Biden's schedule, you should see this website. It's called FactBase. This schedule is updated every 24 hours. Unlike the economic reports, at least we get kind of a 1 week in advance, maybe 2 week in advance. Though with the economic reports, they could update the forecast, and that's why it's important that we look at it every week, but also on a daily basis in case things change or get added or modified. But the president's schedule and the White House schedule combined is updated every day at midnight at Eastern time or at 9 p.m. Pacific time. So that gives everybody at the West Coast a little bit more of an advantage, because a lot of people at 9 o'clock p.m. are still going to be awake. So that way we can look at this and to see what the next day is going to look like. And these are usually scheduled during the middle of the day after the economic reports have been announced, or during power hour. And so again, these are all, like I said, they're all intentionally planned and scheduled to happen precisely the way that they need to happen. It's impeccable. It's amazing knowing this stuff. And so but the important things to look for is these key words. The president delivers. That means he's going to deliver. He's going to talk. And when he talks, the stock market can get very volatile. It just depends on what he's going to say. Now, we can always listen in before it happens by going to YouTube and typing in Joe Biden live or White House live. And we want to do that 15 minutes before this before the scheduled time, because sometimes they can get on there early, or sometimes they can get there late. But the one thing we do not want to do is to be late. We do not want to rely on news notifications, because if we are relying on news notifications, you're leaving money on the table. We always need to be aware of what's going to happen before it happens, because again, that just gives us a huge advantage. And because if you get the news notification, hey, this is what's going on, that could have happened 5 minutes ago, that could have happened an hour ago, and you're late to the party. And you don't want to do that. You always want to be early. If you're on time, you're late. And that's why. And then sometimes it can provide a little bit of information of what it's going to talk about, and that may give us an idea, is it going to affect the market? Now, it's definitely going to provide volatility, definitely, every time, but it may give us more clues. Will it provide us more bearish characteristics or bullish characteristics? If they're talking about like the economy, that's going to help the economy, that's bullish. If it's not going to help the economy and it's just an off topic, expect volatility, but we could see bearish characteristics, because really the guy needs to be focusing on helping the economy, and that's what investors in Wall Street are looking at. And so now the White House, a lot of times it'll be kind of this bluish green color code, and it may say something about the White House press conference, blah blah blah. But lately, the speaker has been traveling a lot, so she's been kind of like doing this Zoom meetings while she's on the Air Force One plane, and so that doesn't really provide the kind of volatility that we're kind of looking for, because it's not live in person, and where we have journalists that are kind of drilling them with questions. But something like this, where you see on Thursday, we see press briefing by Press Secretary Karina, blah blah blah, National Security Advisor Jake Sullivan, blah blah, and so there's no subjects. We don't always know what they're going to talk about, but usually with the White House press conferences, they just give us almost daily updates of what's going on with the White House, what's going on with Joe Biden, what's going on with maybe the economy, what are we doing in today, but also then they open up questions for the journalists, and sometimes you have to think like a journalist. What would you ask the White House if they were to ask you for any questions? That thought is most likely going to be asked, and that could provide volatility. It could provide an answer we don't want to hear. It could provide an answer that could scare investors, and that could trigger kind of a sell-off. And so, but regardless, if Joe Biden's talking or the White House is talking, usually if the market is going to surge or plunge, it's going to happen within 5, 10, 15 minutes. After 15 minutes, if there's no drop, then most likely the market is either going to it's just going to range kind of where it's at, or it's going to continue going up. And so but that's why it's very, very important that we dive into this before it happens. That way we're aware of how Power Hour is going to turn out, because we've already went through all those economic reports and everything. Now it's all about Power Hour, expecting volatility, because part of our rules and our guidelines for straddling is to buy within the last 5, 10, 15 minutes before the stock market opens. And with those with a low amount of experience, you buy both your calls and puts 5, 10 to 15 minutes before the stock market opens. But as you gain more experience with moving averages, now we can buy and sell at different times. That way we can maximize our gains on one side while minimizing our losses on the other side. And so we can buy at different times during power hour. That way we can begin our straddle going into the next day with some gains. And so that's why it's just really important to know this stuff. But it's also important to know about quantitative tightening. If you're new here or don't know what quantitative tightening is, we have quantitative tightening and quantitative easing. We also call it QT for short, or QE. Now, quantitative tightening is the government selling stocks. They're selling the stocks they bought when they forced the closure of our economy on the second quarter of 2020. That was called quantitative easing. They were buying stocks after they had forced the economy and the stock market to plunge. I even watched, many of us watched the barrel of oil plunge below $1 a barrel. I could not believe it. I didn't even know it was possible. In fact, a barrel of oil went down into negatives. I've never seen anything like it. Normally when you see something go below a penny, it's usually a fraction of the penny. But no, oil was in the negatives. It was unreal. And but at the same time, the government was buying billions and billions of dollars worth of stocks, just a variety of different stuff. We called that pump days, as one of our members of our group was very familiar with this and that system, and he was able to provide me the knowledge on knowing about this. And I learned that this is something that the government has to reveal to the public. There has to be a schedule, but they don't have to mention it. They don't have to tell us where to find it. They don't have to mention it on the news, and they never do. And so, but this is the schedule that we have that is scheduled to happen, and the quantitative tightening has been scheduled to happen twice a week, which is very aggressive, for the remaining of the year. Then after the year, it becomes once a week, and then for several months, then it becomes once every 2 weeks, and then it becomes once a month until towards the end of the summer. As we get more and more into that, with less and less quantitative tightening and less interest rate hikes, Wall Street and investors will begin to see more and more of the light at the end of the tunnel. And so the stocks are going to surge like crazy, trying to recuperate the loss that they've been establishing for the last year. But for now, like I said, we probably still have more bearish characteristics, more bearish characteristics to go, as we see a lot of this keywords about hope, hoping that the government will start cooling down interest rate hikes. We've seen this before. They can't bullshit a bullshitter. We know that Jerome Powell is going to come out of the blue in a couple weeks and going to say, "Oh, we need to continue being more aggressive on interest rate hikes," and the whole market is going to lose the gains that it just got last week, or here in the next week or so. And so, but what we're seeing here, so for example, this Tuesday, November 15th. It is scheduled that the government is going to sell $5.1 billion worth of stocks. That is a lot of money. That is a lot of stocks. But that's a level of volatility that we need to consider. Now, when the government was buying stocks in 2020 during the second quarter, it happened always during like pre-market. It was consistent. And so with the pump days, it was nice because it was consistent. We always knew what was going to happen. We always bought calls. We never have to worry about buying puts the day before. We didn't have to straddle. You just buy calls, and you were almost guaranteed that it was going to double your investment every time. But this one is trickier. Even though we know what's going to happen before it happens, these can get executed during pre-market, it can get executed during the middle of the day, or it can get executed during after hours, even 1 second before after hours closes, making it look like that it never even affected that day at all. But what happens, it affects the next trading day. So for example, if that were to happen, if they executed selling $5.1 billion worth of stocks during after hours on Tuesday, November 15th, it would affect the next morning on Wednesday, November 16th. So these are just the scenarios that we have to be aware of. So there's three scenarios: pre-market effect that can also affect the rest of the day, as well as the middle of the day, and then the after hours. So most likely, I'm thinking that Tuesday they'll probably do it after hours, maybe letting the because if Wednesday economic reports were so strongly bullish, it may be able to eat this right up and may not have much of an effect on it. However, $13.8 billion, that's a different story. That is a lot more money. That is harder to counter, unless the government or a bunch of hedge fund companies were able to pump the market with $13.8 billion by buying a bunch of stocks. I highly doubt it, especially with us knowing that Thursday is anticipated to have bearish characteristics or mixed signals, as well as Friday being most likely full-on bear mode. And they could save this $13.8 billion worth of stocks to sell during after hours as well, making Friday even more bearish. So, but just know and be aware of this. And if you want this link, I can always send it to you. Just let me know within the our chat room. But we do talk about it every week, and we go over it. And because it's just very, very important to be aware of what's going to happen before it happens. And so that leads us to the next thing. Let's look at some stock options activity. And so this stock options activity, we use mostly the bar chart website. And so we're looking at the most active stock options, and basically this is for Friday. This website updates every 15 minutes when the market's open, but when you're looking at the most active options, the prices will change every second. So it kind of becomes like your radar. This is our radar, so that we can see what the market is, what stocks are doing, and we can also see, because this is sorted out by options volume. So Tesla had dominated the options world significantly by 3.3 million in options volume. Amazon second place at 1.9, as well as Apple just shy of that, and then Meta or Facebook is down at the 1 million in options volume, while AMD and Nvidia are just right below that. Now, when we normally look at this regularly, we see things that are normally on here, like Tesla, Amazon, Apple. These are our primaries. These are the ones we always go heavy on. And it's recommended to straddle because, the market can easily get interrupted. Even though we always try to learn what the market's going to do before it happens, but it can always be intercepted by something. It can be intercepted by some kind of catastrophic news, especially around the world. Maybe there's another war that happens or breaks out, or anything can happen. Joe Biden can easily have a heart attack, and that news gets out there, and the market can do whatever. I mean, it can surge, it can plunge. There's uncertainty always around the corner, and when we're straddling both calls and puts, it's like an insurance play. It does not matter if the stock market surges or plunges down. As long as it picks a direction, it's always in our favor. But with part of our rules is to always follow the money. Again, this is where investors are putting their money, and if they're doing it, so do you, so do I. It is part of our rules. Now, We can also go 50-50 into our calls and puts as a ratio, or we can rely on the calls and puts ratio as a guide for that, because as we're following the money, investors are basically, out of this amount of options volume, 3.3 million in options volume for Tesla, 57% of that options volume are betting that the stock is going to go up, while 42% are betting against the stock, betting it's going to go down. So we can round that up too. So basically it's 60-40. So we can go 60% on calls, 40% on puts. So to try to, we've got to be a little good on math a little bit. So that means, you would have 6 calls on Tesla while 4 puts on Tesla. Or if we cut that in half, that means we have 3 calls on Tesla and 2 puts on Tesla. That's how we can manage that ratio and following the money. Now, Amazon is nearly 70% calls and 30% puts. We still have to have limitations on volume, limitations on maybe percentage ratios. Most of my limitations, so even if it's at 70% calls, I'm still probably going to do more like 60%. So I'm still going to be a little heavier on the call side rather than the puts, because what if the market is intercepted with some kind of bad news? What if Russia, even though Russia had pulled back from invading one of the major key points of Ukraine, but what if they did something? What if they all of a sudden started using nukes in their artillery or something, and that just created unexpected bearish news. When we're straddling, just bring it on. It don't matter, just bring it as long as it's volatile. And a lot of times, if the market was one way, we can secure our gains on that side, and then a lot of times we're holding on to the loss on the other side, and the market kind of retracts, and we can minimize that loss and sell it at different times. And a lot of times that loss can turn into a gain, because what if the market was green or opens up in the green and then falls in the red moments later? So now we can gain on both sides. And then Apple, so we have out of this amount of amazing options volume, it's nearly 60% calls and 40% puts. So in a way, this is another clue of to know, is Monday going to be bearish or is it going to be bullish? Because there's no economic reports, there's this is the clue. This is where it's located to determine, is Monday going to be bearish or is it going to be bullish? So basically, Monday is more likely, more about 60% it's going to be bullish, or about 40% chance it's going to be bearish. So because we're always focusing on the majority here, that is looking good. Now, when we're looking at this regularly, we normally see these regular stocks. They're here on a daily basis. However, we'll occasionally see stocks that are not normally on this list, and that would be maybe like ExxonMobil. They're not normally on this list. Why are they on this list? Another one would be Coinbase. They're not normally on this list. Why are they on this list? Now, we didn't notice that that Coinbase had an event. What was that? A cryptocurrency event, was it? Let's go back here. And that could be one of the clues that we need to put together here, because the company is participating in an Oppenheimer blockchain and digital asset summit. Says expect price movement around 17%. And so Coinbase, they already moved almost 13% for some reason on Friday. So expect more volatility with Coinbase, because it's on here now. Again, this is our radar. This is beginning to fly underneath the radar. Now we know why. And so, this is a great resource, guys. This is a gold mine. All this information that we're talking about is huge. You will not find this in a book. You will not find this from a YouTuber. You will not find this anywhere else but right here. Another place that we can go to is the option volume leaders. This page on this bar chart website provides us the most active individual calls and puts. Though it's important that you are aware of the DTE, which is the number of days until that expiration expires, or the days until it expires for the option. So, but when we're looking at on a weekend, we want to avoid the zeros and focus on the ones that have a number, because these are the ones that are currently active going into the next week. So Amazon, which is currently at $100.79, we have a $100 call, so it's already in the money, which again, that is part of our rules and our guide. When we're buying calls and puts, it always needs to be at the money. It needs to be at the share price, or at least within a 1% price movement, because it needs to be reachable. If it's not within reach, then the stock market system is going to depreciate it greatly compared to if you are in the money. Then you're going to have the least amount of time depreciation. And we don't want to be actively holding anyways. We want to be actively trading. The next second most individual active call and put is the Apple $150 call strike price. Now Apple is currently at $149.70. We have a $150 call strike price that also expires this Friday, the 18th. They have a good amount of open interest and volume for these guys, especially with Amazon, has a significant amount of volume. Now, if you're new to options or don't know what open interest is a total number of open option contracts that have been traded but not yet liquidated via offsetting trades. That means that these were previously bought, but they have not been sold. So that gives us more highly valuable information, showing that on prior from Friday, so Thursday and before, have accumulated 52,000 in open interest. And with this exceeding that last Friday, most likely that this is accumulating more interest because it has exceeded the current open interest, meaning that it is pure buying unusual activity. Now, if it was less than the open interest, most likely it's a blend of buying and selling activity. But it could also mean it's all selling activity. We don't know. But if it's greatly exceeds the open interest, then we know that is a massive amount of buying activity, especially going into next week. Investors are bullish for Monday. And there's a lot more others here, like Ford Motor Company. Looks like it has a $13 call strike price. That one's already in the money because Ford right now is around $14.50. Accumulating a lot more interest because the volume is exceeding the open interest. Then we have Laser. They specialize in laser radar technology. They've had a pretty good beating lately, and it looks like they're trying to. Looks like there's a lot of fresh interest in it because the previous open interest was hardly anything, 1,000. Now we have 57,000. That is a massive amount of highly unusual buying activity. And if you're not sure what laser radar is, it's phenomenal, and it's really needed if the automotive industry wants to continue going with full autonomous technology. They really need laser radar technology to be absolutely perfect and flawless. They can't just rely on sonar radar and cameras. They need a little bit more depth perception, and laser radar technology has it. And but yeah, just a lot more other good ones. There's the Exxon Mobil. There's another Apple. Now, if you're not so much a short-term trader, day trader, swing trader, and you're more of a long-term or just like the whole, because sometimes people just don't have the time like we do have to be able to do this full-time. And so I have a trick for you. Instead of focusing on the by volume, let's focus on the open interest. So I'm going to click on open interest. It's going to sort the page out by open interest, but we want to refresh the browser so that way we can refresh the whole entire system by open interest. And so now we can see Nokia is number one, highest open interest. We have a $5 call strike price. Now look at the expiration dates. They're much, much longer. Most of these expire next January, so you got plenty of time to buy and hold. And you don't have to buy as a stock option. You can also buy it as a share. For example, let's see if we can find a good one here. Like, for example, Vail, which is currently at $15.45. We have a $20 call strike price that expires in January 20th. Let's say you just buy a bunch of $15 shares. It gets to $20 in 3 months or a couple months. And so by going from $15 to $20, you just gain 30% just by holding the shares. And so this can provide you a tremendous amount of other bit of information on what people are doing. And especially for a short term or even a longer term of time. So like, same thing with Ford. Ford right now is $14.50. We have a $20 strike price that expires in another year, in January 2024. And so, some of these may pay dividends. So not are you holding on to something that's appreciating, but some of these may also pay you dividend every 3 months that you can use as more buying power to reinvest into more dividend stocks or whatever. And so, but like I said, this could provide you a massive amount of highly valuable information. Here's Amazon. Look at this. Amazon, which is fighting to get back up there. It was at 80 some odd dollars just earlier last week, and now boom, of that one day it went up 14%, and it kept going the next day. But we see investors see Amazon reaching $150 after the Christmas holidays. We were just talking about that, you guys. The retail sales. The fourth quarter is the prime time. It's a game on retail sales. So once we get into the next earnings season, these retail stores are gonna do great, and especially Amazon. And so we can easily see, and even if you buy Amazon as shares, if it gets to $150, that's a 50% gain in a matter of 69 days. So hopefully that makes sense. And then we have ABC, Aurora. Wow, look at this. ABC, so that's Aurora Cannabis. Aurora is currently at $153 or $1.53 per share. Now, cannabis has had a rough time in the last several years, and I know why. And so, and I'll share the story with you. So, cannabis, we all know cannabis has always been, illegal, and but slowly it's been used for medicinal purposes. And it went from medicinal to recreational. Starting with Colorado, most of this has been going on in Europe, but Colorado, started the recreational, and then my Washington State did, and then it has a domino effect. Now Canada decided to let's vote on legalizing recreational cannabis from coast to coast. They voted on it and it passed. And this happens usually during the middle of the year when they vote on these things. So it passed. And so they're like, okay, so the next calendar year, it'll be legalized from coast to coast. So we're all pumping cannabis stocks up. These were penny stocks. They were like $5, $10, whatever. And we pumped them up to $50, $100, $150. Well, we did not know, are these long-term stocks? Should we be holding? But again, as part of our rules, always be actively trading, not actively holding. But it was still, because this is this is a once-in-a-lifetime opportunity, because it's a new thing. We just did not know how things were going to react. And so, but when Canada legalized it the next calendar year, we had so many growers, we had so many shops that it was no longer kind of like a profitable industry. And so these stocks were plunging right back down to penny stocks, moments later. And so, and they've been penny stocks ever since. However, we have one more lifetime opportunity at this. And so I think a couple of years ago, Mexico just decided that they were going to legalize recreational cannabis. So now the United States is sandwiched in between two countries with recreational cannabis. And so this year we've had the Biden administration do kind of like a forgiveness thing for a federal forgiveness thing for cannabis crimes. And so, but slowly but surely we're getting to that point. Now, every year or so, our government will try to do voting, but it has to go through several channels. It may pass one channel, but it doesn't pass the next channel. But it gets better and better every time that they vote. There's more voters that are voting to opt in for it. So there's two ways that this is going to go down. It's inevitable. The United States of America is going to have legal recreational cannabis from coast to coast. It's going to happen in two ways. We're either going to vote on it and it's going to pass that way, or there's a certain point where by a certain amount of states that have legal recreational cannabis, once it gets, I can't remember the number, it's like 23, 25 or whatever, but whatever that number is, once it reaches that number, it'll become automatic. So from coast to coast, the rest of the United States will have legalized recreational cannabis. Now we may start to see some clues on that, just like this, where we see that Aurora Cannabis is at about $1.53 a share, but we have a massive amount, a $5 call that expires in January of 2025. That is a long way. We got like 2 years away from that, but this could be a clue that something may be starting to happen. Because there could be like insider trading. This is our radar. Remember, you guys, our radar. We have to know what's going on, where the money's going. We have to know what's going to happen before it happens. And this is all part of our process. And so this could be slowly accumulating more interest. We got to keep an eye on this on a daily basis, as well as other cannabis stocks. And but this could just, who knows? This could just be on here because of the sundial earnings that are coming up tomorrow. That could also affect the rest of the cannabis stocks. But if that were the case, why aren't those on here as well? So I think that this just may have maybe one of the fastest, biggest gains in a short period of time if they do start talking about it. But just know that the cannabis will provide us a massive opportunity very, very soon. And just be aware of the history, because sometimes it just makes more sense if we know more about the history and how it's going to play out. So hopefully this makes sense to everybody, because if don't make dollars, don't make sense. Anybody have any questions? Anything anybody want to go over? We can do screen sharing if you guys want. Feel free to unmute your mic.
Yeah, I do, Carlos, and I wouldn't mind screen sharing for a quick minute if you're okay with it.
Yeah, absolutely. I'll go ahead and I'll disconnect my screen. You can go ahead and go ahead and do your screen.
All right, I got my screen. So can you see my screen?
Yes.
All right. So I want to talk about. I'm not considering an NVIDIA straddle, but I am curious about option pricing and earning expectations. So if I look at NVIDIA, we're saying we're expecting a 9% price move. So NVIDIA ended at 163.12. 9% price move means $14.68 in either direction. But look here at the straddle price, it's $14.50, so pretty close to what the price move is expected, a little bit under. So you might even say that if that price moves happens, that straddle will be profitable. But if the stock doesn't move by $14.68, the straddle is not profitable. Is this the right way of understanding it?
Oh, absolutely, absolutely, and most of the time this volatility is expected, but every once in a while it could be intercepted, or by maybe some leaked news information or whatever. Like sometimes we've seen where the earnings release was accidentally released while the market was open, and that would cause the stock to plunge or to surge. But then before close, it starts to kind of level out. And so, there could be all kinds of things that can happen. But for the most part, usually the volatility is expected.
So that brings me to, we often say, all right, NVIDIA is the ER, so straddle something that is parallel or competitor to it. I'm looking at AMD. Now, if I look at the AMD straddle, it has a total cost of 4.73, AMD at 72.52. 4.73 is 6.5% of 72.52. So that would mean that I would need a 6.5% price move for my AMD straddle to be profitable.
I don't think so. No. You would usually once you get over about 1 to 2%, you're in a very profitable area. Once if you're within 1-2%, it may be a wash, because whatever you've gained, that's kind of what you're losing on the other side too. But once you get out of that little area, once you get over 1.5 to 2%, you're in a very profitable, and you're in 3, 4, 5%, you're in a very, very profitable position.
Got it. And the reason that works on the AMDs is because I don't have the same implied volatility as NVIDIA, which is overpriced in there, which is why it's so expensive.
Yeah, and earnings is going to have a certain level of implied volatility crush in it anyways, regardless of the volatility. But we just need a massive amount of volatility, so the implied volatility crush doesn't even matter. It just overpowers it, making it a good situation.
Yeah.
But if we straddle it's a competitor that doesn't have earnings, then we're not at risk of any implied volatility crush.
Makes total sense. Thanks. That was my question. I will give that.
Absolutely. Anybody else have any questions? Want to go over anything? Everything makes sense. That's really, really important going into next week. Because the more you learn, the more you'll earn.
If nobody has a question, I do have another one.
Sure.
You mentioned you were talking about power hour and then buying your straddle at different times to start with some gains. I understand that that's more advanced and it's safer to wait to the last minute to buy the straddle. But can you show us how you do that? I remember when we were live with Marla the other day, you were doing that. You were buying your put for your Amazon straddle or something before buying your call. Can you show us how you fine tune that? Because by doing that, you're minimizing your losses, maximizing your gains a little bit earlier. Because often when I buy my straddle, I try to buy it at the 58-minute mark, 58 and 30 seconds. And very often I start at -20 or -10. So how do I mitigate that? What are the signals that can prompt me to say, oh, buy that call now instead of waiting for 58? I'm hoping that question made sense. And if you're talking, Carlos, I can't hear you. I can't hear anyone.
Okay, yeah, got it. Thanks. So yeah, no, I completely understand the question. How to buy at different times during power hour. And so Amazon, which is what I have pulled up on my screen. So if you do not see my screen, you guys, you'll need to kind of dig in there and pull it up. That way you can see what I'm seeing and showing. And so, but Amazon being the primary, we're looking at Amazon stock for last Friday and trying to focus more in the power hour. And again, usually we have those press conferences, or when Joe Biden talks. So we can kind of anticipate, some volatility around that time, around that power hour, and so we can see that the market had dipped. Now, when we're looking at the graphs, these little boxes are every 1 hour. So you got 1 hour there and there. So basically, the market had plunged down on Amazon during the 2 hours before the market closed, and so as it went down, the price line begins to start coming up, and we can, when we're looking at the first hour and the last hour of the day, we need to really look at both the 1 minute graph and the 5 minute graph. And so let me pull those up here really quick, because one may communicate better than the other. The 1 minute charts can have more signals versus the other one's going to have less signals. So the timing of things may be a little. So the market on Friday, falls down during the 2 hours before the market closes, and as it comes down, we can see that the MACD is starting to cross over right here, when Amazon was right around the $100 area, and it starts to go up. It's $115 now. Now we see green in the MACD, so it's telling us that as we're entering power hour, the stock price is trying to go up. So and this is where we can start to buy our calls. Now the $100 areas is still pretty early on the 5 minute graph. So the 1 minute graph is telling us you should start considering buying some calls. You don't have to go heavy on calls yet until maybe the last 5 minutes, but if you start buying some, you can start gaining some gains within your straddle. And so by buying some calls there, as it's telling us it's beginning to uptrend, and now as it's beginning to fall, we can buy our puts in the remaining left of our calls 5 to 10 minutes before the stock market closes. And so that's how you would kind of utilize the both graphs for the first hour and the last hour, and when to buy and when to sell. Its key is these crossover signals. When the price line crosses over or cuts through all 3 moving average lines, and when the moving average lines crosses over each other. When the top one is now on the bottom one is on the top, that's the crossover. That is the last and final buying and selling signal that we're looking for to make our final buying and selling decision.
Cool. I will practice that on paper. Thank you,
Yeah,
Carlos.
absolutely. Anybody else have any questions or comments, or are you guys ready to rock and roll? You may have to speak up a little bit or get closer to the mic. We can't hear you very well. Can you repeat that? Yeah. Now again, Bed Bath & Beyond is one of the retail stores, as we have talked about retail, as well as when we were seeing unusual activity with Bed Bath & Beyond. We were seeing that, and knowing that Bed Bath & Beyond's prime time is during the fourth quarter, just like any other retail stores like Amazon and whatnot, where we would expect them to do some pretty amazing price increases with their share value during the fourth quarter earnings, which will take place during the first quarter. And so, but what we're currently seeing with Bed Bath & Beyond's activity, now Bed Bath & Beyond, which is currently right under $4 a share, it was up almost 2% last Friday, but we do see a $40 call strike price. Now to go from $4 to $40, that is a 1,000% gain if you're holding on to shares. So let's take a closer look at the expiration date. So this is saying that that investors are betting that Bed Bath & Beyond is going to reach $40 by April, and it could easily get to that or even close to that even well before that, because like I said, I would expect some pretty major uptrend with Bed Bath & Beyond as we get closer to the next seasons of earnings. So but so far, we're seeing a good amount of calls activity on Bed Bath & Beyond. We're seeing a lot of, well, some of this is going to be expired, but that's one of the reasons why we don't really want to play Bed Bath & Beyond for options, because there's a lot of time decay. It's just we'll always just stick with the majority, but when it comes to shares, it's looking like people are very bullish with Bed Bath & Beyond. Bed Bath & Beyond has experienced a lot of issues this year. They lost a CFO that committed suicide. They're suffering from, I think, some manipulation, some other legal issues and whatnot. I think they even downside. They closed some stores too. And when a company closes stores or does layoffs, it makes the company more profitable, because they have less bills and expense and stuff. So we will see more of this reports probably around January or February. But just know that there's a slow amount of accumulation of a $40 call strike price, which is interesting, but because before we were seeing an $80 call strike price, so we were seeing some pretty interesting, very high strike prices with Bed Bath & Beyond. We can see even a $10, $11 one and whatnot. And there's also a website too that we can go to. It's CNN. If we go to CNN, see Bed Bath & Beyond forecast, we may be able to see what their analysts are predicting what it'll do in the next 12 months, which doesn't look good because we can see out of 10 analysts that offer their 12-month price forecast for Bed Bath & Beyond, that the highest level is around $7.60, which would be an 89% gain, where the lowest level, they're saying that it could be down that. However, medium level, they're saying it should be probably about like $3 in 12 months, which would be a 24% loss. So I would definitely, if you're planning to continue with this, I would definitely get out during the next season earnings when the stock is up, because once it's up, it can easily begin to fall down after the Christmas holidays, going into the spring and summertime. That's what this is. This is that's the low points, and you definitely do not want to hold throughout that. Just take advantage of the holiday shopping, get in, get out, secure your gains, and look for other opportunities. But this can be a great website to determine what amount of analysts believe that it will reach in 12 months. Now, I'm going to show you something that is very, very rare, and I think it would be under Neo. No, not Neo. Gosh. Let's do Amazon. I'm trying to think of one. What I'm trying to find is where even the worst case scenario is higher than the share price. Let's do Lucid maybe. Gosh. Alibaba, maybe. No. So look at this. This is pretty close. But so Alibaba right now, which is $70.78. They have 46 analysts that are offering their 12-month price forecast for Alibaba in 12 months. So they're saying the worst case scenario, it'll still be where it's at right now. Out of 46 analysts meeting in the middle, they're saying Alibaba should be about $136 a share, which would be a 93% gain. Best case scenario, Alibaba would be about $222 in 12 months, which would be about a 214% gain. So if you're a long-term holder / maybe semi-short term, this would be a great tool to use. That way you can determine your level of risk. Because getting into this is a no-brainer. China is opening their more of their country for economic stuff and whatnot, retails and whatnot, and so Alibaba, which this is probably one of the lowest points it's ever been. Alibaba is the Amazon of China, and so online sales are huge there, just like they are here or anywhere else. And so and that's why Amazon is really down. They're down $100 now. But we were seeing that $150 call strike price. So people are bullish on these, but like I said, this is a great way, because this is very rare. Very rare do we ever see where the worst case scenario is higher than the current share price. So just know that, just a cool little tip. So hopefully this has been very informative. I know this can be a very information overload meeting, but hopefully this has been very informative for you, where you can take advantage of it for the rest of the week. So any questions, you guys, feel free to message me in our chat room or directly. Anybody have any questions before we go?
Yes, sir. So on Wednesday, I asked you about the strategy that you followed for penny stock 5 years ago. You said to join the group on the meeting.
So so that's good that you are bringing that up. I'm glad that you're here now. And I've always been into long-term stocks. I've been into long-term stocks for probably the last 15 years. I did not really know about day trading. I may have heard about it, didn't really pay attention to it, just put money into stuff and just let it sit. But after a while, you watch your gains. Your gains go up every 6 months, and it goes down 6 months, and it go up 6 months, and it goes down 6 months. So after 10 years, I had enough of that. And I was like, okay, I need to learn more about this. Just like anything else, learning about a game, like playing Monopoly. The more that you know about the rules and how to play it, the better player that you're going to be. And so I had discovered a day trading. I didn't know you could do that. I didn't know you can get in, get out. You can do that within a couple seconds. You can do that within a minute or hours. And so I was like, wow, this is genius. And I thought penny stocks was where the money's at, because the penny stocks, we see huge movements. We can see, I've seen penny stocks plunge 90%. I've seen penny stocks surge hundreds of percents. And however, as we're starting to learn more about something, we're always wanting to follow the money, following how do things work. And so I had learned more about pre-market, because most of the time penny stocks do very well during pre-market. And so so that means we have to learn about pre-markets. Like, what is pre-market anyways? So why do we have pre-market? So it's just all these things and whatnot. And with pre-market, I had discovered a lot of things, but I had discovered that pre-market starts because when Robinhood came out, Robinhood only allowed people to trade 30 minutes before the stock market opens. When actuality, the pre-market starts like 5.5 hours before the stock market opens. That's huge. And so that means penny stocks become active shortly after that. so the market opens, let's say 4 a.m. in the Eastern time, or 1 a.m. Pacific time. 1 a.m. That is super early. So 4 a.m. Eastern time, pre-market opens up. Now that the whole entire stock market is semi-open. We have percentages that are moving and everything, and so we can start monitoring for pre-market activity. I don't usually use the web browser version of Webull, but there are screeners that you can look at to look for pre-market activity. Now, the investing.com also has a pre-market area. Let me see if I can find it really quick. So that way they can kind of let us know. So if we go to investing.com, we got stocks and then pre-market. So that way it kind of already has, some information going. So we have most active pre-market stocks, and most of these are going to be penny stocks. But what we're looking for is penny stocks that have a good amount of price movement, like maybe 10%, 15%. Because if it's 10%, it can then begin to move to 15%, 20%, 30%, and then more. And then so what we want to do, if we're seeing that kind of momentum during pre-market, we want to get in and then get out before the market opens, because for some reason when the market opens, the penny stocks want to fall. They want to drop, because it's very similar to buy on rumor, sell on news. Because when the market opens, it's like news time. Everybody's selling, they're securing their gains. But a lot of times you'll see the penny stocks will begin to plunge or begin to lose their gains minutes before the market opens. And so most of your penny stock success is going to be during pre-market. And so I was getting up super early in the morning doing all this stuff. But the thing about penny stocks is that we're having to look for a different penny stock every time. Unlike stock options, we can trade the same stock over and over and over on a daily basis and have gains coming out of it on a daily basis. Versus penny stocks, now we have to go and find, okay, what's the penny stock to look for today? And it's a different every time. Now, there may be a way you can have an advantage. Let me see, I'll find it, where I'll post it in the chat room, that way I can pull it up for you really quick. But the advantage to knowing what's going to happen before it happens to a penny stock, now it's a lot harder with this compared to the stock options. It's one of the reasons why I left penny stocks. Actually, when I got with stock options, I decided to trade stock options as if they were a penny stock, but during the middle of the day. And so when I did that was a huge game changer, because now I can day trade. Because when you're trading blue chip stocks like Apple, Amazon, Tesla, the graphs are much easier to predict versus penny stocks. Because penny stocks are very hawkish. They can shoot straight up and they can plunge straight down. And so versus blue chip stocks, they're much more mellower and they're a lot more predictable. So we can get in and out a lot better. But the gains from stock options are just like penny stock gains, where we can gain 10%, 20%, 50%, or 100% in a day. And so that was one of the reasons why I left penny stocks, was because we don't have to get up super early in the morning. Because stock options are only when the market opens or throughout normal market hours. And when straddling both calls and puts, now we can sleep better. Because if you're just a one-way person where you're just buying only calls or puts, you're stressing out. You cannot sleep because you're constantly thinking, wow, did I make a good choice or did I make a bad choice? Oh, I hope it doesn't, or I hope it does, straddling. Now you have calls and puts, you have secured both sides. You can sleep much better. So the market now, when you wake up early in the morning, even if it's 30 minutes before the stock market opens, you know exactly how to play your day when the market opens. And so, but like I said, penny stocks it's just a lot harder, a lot trickier. But I found the link. I'm gonna copy it and paste it to the chat room here. Let me find it here really quick so I can do that. Paste it in the learning center. And okay, let's go there really quick. Learning Center 1, and there it is. So I have not been to this website in a long time. So this is so most penny stocks are pretty much like biopharmaceutical stocks. And so one of our pro traders many years ago that taught me this, since a biopharmaceutical stock, it usually has the FDA approvals, and so drug trials. So a lot of there's so many drug companies that are trying to develop certain drugs, and so but they have to go through certain levels of trials for it to pass, for it to continue, so it can go on the market. And so this website, which I just pasted or copied and pasted, is in the Learning Center chat room for you. That way you can click on it, bookmark it if you're into penny stocks. But it gives you the ticker right here. We have the share price, the drug, and everything, indication, whatever phase, what drug level phase that it's currently in, phase 1, 2, 3. The higher the phase, the closer that they are going to get to putting it on the market. The closer it's going to get to the market, the higher the value of the stock's going to be. However, it says catalyst date. So there are certain dates where they'll provide updates, or where the FDA will look at it to provide an approval, whether that drug company can go to the next level with its drug trials. And a lot of this could be like cancer treatment drugs, breast cancer, lung cancer, whatever, AIDS, HIV, it could be all kinds of stuff. This is huge when you're into the penny stock. I don't recommend being in the penny stocks, but if you are, this is just a great, a bit of a resource to add to your ammunition or your tools and everything. So, but I watched the pros use it. I used it for a good couple of years until I decided I'm just going to get into stock options. I'm going to try that out and trade stock options as if they were penny stocks. And again, it was a huge success. I started with this, mastered this with moving averages, and it was definitely a struggle. It was a grind. Options just made things so much. It just made life easier and profitable, because straddling, like I said, you can only lose what you have on one side, but your gains on the other side are potentially unlimited. For example, let's take a look at AMD. AMD right here, if that was the only stock option that you trade, and there's a lot of you guys that's all that you do. You straddle AMD. Some of us, we straddle Apple or Amazon or whatever. But look at this. Let's say you straddled both calls and puts on AMD. You just lost, let's say worst case scenario, you lost 99% on puts because AMD was up only 5.5%. You lost 99% of your puts, but you just gained over 400% of your calls. Why do anything else? Why try to fix something that's not broken? Why even do penny stocks when this can make life so much easier? Always follow the money. This is what what the majority of professional traders and investors are doing. That's what I decided to do, and that's what I recommend. That's why options is a lot more popular than they are on penny stocks, especially if it's something that we understand a lot more. And like I said, it's a lot less of a fight. It's a lot less of a struggle. You get to sleep more, and when you're straddling, you can also sleep like a baby. And so hopefully that makes a lot of sense, and hopefully you'll be able to take advantage of all this great resources sorry this meeting took too long. I know we're about 2 hours in, but time is money. You guys learn a lot from this. You guys are gonna benefit from it every single time. Though next week, being a holiday week, Thanksgiving, I'm going to be out, so we're not going to be doing a meeting next week, but I will still be available through chat. So just know there won't be a meeting next week. But these, if you guys want to host a meeting, these live rooms are completely open to you guys. These are free, doesn't cost anything. Take over, if you want, but just know, I'm not going to be, participating in the meeting next week. But I encourage you guys, take over. If I'm not available, take over, have a meeting, maybe go over the same stuff or do your own thing. But let's be active. Let's help each other out, make good choices, and let's make a lot of money this week, guys. Thank you very much for coming, and hope to see you next time.